Hi everyone, Mario Quintero here with my weekly live happy hour show, the one-stop shop produced by marioshomenews.com. Hope everybody's having a wonderful week. It's the last week in February. We're heading into spring pretty soon, and I hope you guys are doing well. Today I want to talk a little bit about some common sense things of what not to do when you're in a refinance or mortgage situation, whether you're refinancing or whether you're buying a home. These are some things that you definitely do not want to do because it could kill your deal, it could kill your refinance, and really ruin the objectives that you're trying to accomplish. So the first one, believe it or not, and I've seen people do it, is don't quit your job. Do not quit your job until the process is over, okay? And when I say don't do it until the process is over, because part of the quality and control of a mortgage is that the lender will actually sometimes verify your employment the day of the closing. So if you feel that you got to clear to close and you're closing Friday, make sure you stay on the job until the loan actually funds, because it could kill the deal if they verify your employment and your employer tells them no, they've been gone for about 2 days now and they no longer work here. So very important item. The next one is don't start a new business. Either you can't use business income until your business is 2 years old. So if you're going to be involved in a mortgage transaction and you're thinking about starting a new business, make sure you do the mortgage first and then go ahead and at some point start your business, because you're going to need 2 years of that business being in place, operating and making money in order for you to qualify for a conventional or FHA loan. If not, you're going to have to seek alternative financing if that business is less than 2 years old. Whatever you do, don't get a brand new car lease. I know that everyone is tempted by all the car commercials. I mean, there's got to be about 200 car commercials a day as you're watching TV or even on your phone. Now they're coming on Facebook. You're getting hit all over the place. Whatever you do, do not add that extra expense to your monthly obligations, because it could hinder your ability to get approved and finalize your transaction. Don't buy or lease a new boat or jet ski, even if the monthly payment is going to be $150 a month or $75 a month for a jet ski or whatever they cost. These are long-term financing plans that boats and jet skis offer to make your payment as low as possible, but that's going to add to your monthly obligations, and you don't want that to throw off your debt to income ratio. So I know we just had the big boat show here in South Florida, and one of the things I told many of my clients was, whatever you do, if you're going to the boat show, don't buy a boat or a jet ski. Don't buy new furniture. If you're in the process of buying a home and you're in the process of in the mortgage for that new home, there's a lot of furniture ads out there. You know, don't pay for the next 7 years. Don't pay for the next 10 years. Make very small payments over the next 7 to 10 years. Don't buy the furniture until you own the house, until you actually have the keys, your loan closed, and you're moved in. Get the furniture then, not before, because that could also kill your deal. Don't take on new credit card debt. One of the factors that we use and all lenders use is your monthly obligations. So whatever your minimum payment is on all your different credit cards, we look at that and put it into the system to calculate your debt to income ratio. If you're out there buying clothes, shoes, going to dinner every night, that's adding to that monthly obligation, and that could also hurt your chances of getting your final approval. So financial discipline is very important during this process. Try not to buy a vacation, okay? I know here in Florida, there's a lot of deals going on with go on a cruise to the Caribbean. 5 days, 4 nights. Go on a Disney cruise. Go here, go there. Don't do it. You got to wait until you're in the house, or wait till your mortgage is funded. And there's a difference between cleared and funded. Cleared only means that we're on our way to closing. Funded means that you're closed and funded. So any of these expenses, you want to wait until you're closed and funded before you add any of these expenses to your credit. Financial discipline, I just mentioned that before, is extremely important for all borrowers involved. So if we have 2 people on the application, you want to make sure that both of you are following the same discipline as to not spending extra money and adding money to your, or debt to your monthly obligations. Very important that everyone's on the same page as you're heading to meet this new objective. This is a big one because we see it all the time. You know, sometimes the telephone companies, maybe furniture companies, a mattress company, sometimes medical services or a lab, you may have a balance that you don't agree with, and sometimes it could be as little as $25, $75, $150, and maybe you don't agree that you are responsible for that small balance. My suggestion, try to work it out, but in the end, just pay it. You don't want to have that collection on your credit report for $25 to $150 and ruin the chances of you getting approved for your mortgage to either buy that house or refinance your current mortgage. So those are just some tips for today on what not to do when you're preparing to secure a mortgage, secure a refinance, or you're in the process of buying a house. I mean, spring is coming on. A lot of people are going to be out there looking at homes, and they're going to need to finance those homes. So these are some of the things that I highly recommend you do not do until you actually have the keys in hand to that new home for you and your family, and that you're enjoying your new home. After that, you want to buy whatever, that's up to you and your financial budgets and your discipline. But preparing and drawing until you fund, these are things you don't want to do. If you need any assistance with this, if you want to sit down and have a consultation, my name is Mario Quintero, and you could either reach me here at the office at 305-598-1600, or you could call me directly on my cell phone, 305-588-0451. Once again, this has been another episode of The One Stop Shop. It's produced by marioshomenews.com, servicing all your real estate and mortgage needs in the state of Florida. Thank you. Have a great day and a great weekend. Have a good one.